Laura, you're recommending fundamental investors, remain on the sidelines. I just showed the chart. Maybe they'll bring it back up. It's up 11%. Reconcile that, please.
Right. So I think what Wall Street likes is the fact that this company is subscale, and it looks like they're more likely to win the bid for Warner Brothers, which would then not make them subscale because they would be like a third of total linear channels. They own two of the largest film studios. And really their revenue is up 2%. They had a lot of positive comments about UFC, which was their top rated streaming channel, and streaming revenue was up 17%, Paramount Plus in the fourth quarter. And it should, so, I mean, all of those numbers fundamentally were better. At least this business is growing. Warner Brothers is shrinking, but Paramount, P-Sky is growing still.
I think we'll get to Warner Brothers in a moment. Like, really simple question, and it comes from a sincere place. A lot of our audience have this. Based on what you've just outlined with Paramount Skydance, what does doing the deal with Warner Brothers Discovery, the whole entirety of it, fix or improve or accelerate?
Okay, so if they don't win, if Netflix wins instead, they're an $11 billion market cap company, and their primary competitors will be Netflix, which, if it buys Warner, will be a $500 billion market cap, and Amazon and Google, which are $3 trillion, round numbers. So its competitive position, it will be more subscale than it is today. If it wins Warner Brothers, it suddenly combines and cut costs from several of the largest streaming companies, several of the largest, it will be 30% of total linear TV ownership, and it will have two of the biggest studios. So there's a lot of cost cutting in that, and it will not be near as subscale. Round numbers, it will be around the same size as Disney and Netflix if it wins Warner. So it basically makes it a legitimate competitor to those other streaming companies.
And I think what Paramount Skydance, Laura, did in its numbers was show they can cut costs, and then some, certainly when it comes to the cable part of the business. How much does it need Warner Brothers Discovery?
So good question, because price is the thing you're not asking. But strategically, it must have Warner Brothers Discovery. But of course, you know, we do stocks and we do valuations, and they're paying an awful premium for a shrinking business, as you saw. Like every single business segment, advertising was down, you know, a lot at P-Sky. So some of their businesses at Warner Brothers are shrinking, or a lot of them are shrinking, actually. So, I mean, they're buying a business that's weakening fundamentally every single quarter, and they're paying P-Sky is bidding higher and higher values, which implies they're not going to get a good price on this asset because of the bidding war.
I mean, Laura, you're all about the fundamentals, but are we, if they do have to pay over and above, they have to go to $32 for Warner Brothers Discovery, is that a good deal fundamentally for the business longer term? And given maybe Netflix happens to be able to push them there?
You know, I think the answer is, if they didn't have a billionaire behind this, I cannot imagine a investor, a venture capitalist, a private equity guy, or public markets funding this stock price. But you've got a billionaire sitting behind it, and he can spend his money the way he wants.